This is Eric Mother, Mother.com. As we begin the new month of September 2019, first trading day, markets gapping down here. Let's take a look here at Twitter, which is moving in the opposite direction. If I can find it. Right here, Twitter is up about 1.25% for the day. And again, let me just show you. So it's trading higher while the Dow is down about 1%. Something is going to give. Either the market is going to find some support and move higher, or Twitter is going to have to join the market based on the fact that that 1% move is sizable move. So we can see here on the daily, we are seeing signs of a breakout to 52-week highs. And the level to watch here is if it can sustain levels above 42.85, which goes back to this daily closing high. So as long as it is holding above that level, we can say that this is good. And if it goes on and fails to hold above that level, then that becomes a red flag and a reason to get out of that position. Now we can also see this if we take a look at the 2 hourly. I'll show you that yes, it is clearing recent hourly closing highs. At the moment, it looks good based on that. But I'll show you how the RSI is going to be a problem, or giving us some idea that this might be where it struggles, because if you take a look at the S&P 500 on the 2 hourly, the S&P 500 is showing resistance on the level we've been watching over the last week or so, which is here, with the possibility of dropping below RSI 50 on the 2 hourly for a big down hourly move. If that happens, we can see the same thing if you take a look at the Dow, which is down 1%. Again, pretty much coming back and showing that it is respecting the backtest line that we've been tracking since last week. So the Dow and the S&P 500 on the hourly showing that this is where there was going to be a stall point on the 2 hourly. And I believe if we take a look at Twitter's 2 hourly chart, we can see signs of this. Oh, by the way, go back to that Dow hourly chart. If we go backwards even to this area here, there's a break of a trend line right there. So we take that break, something like that, and without going into too much detail, but we can see quickly here, this was a resistance area of that high, and of course we saw the reaction in the market over a period of time. We went lower, and we've seen the similar thing here where we hit this twice for the highs here, and I'm just picking the main areas, and right now we are showing resistance there. So of course, couple that with the previous line on the Dow, we can see where the market was stalling as we ended August 2019. So this pullback makes sense. Also, we watch to see whether the Dow can hold above RSI 50, because if it drops below RSI 50 and stays below 50, expect a big down hourly move, which might explain the gap down. And by the way, there's another line to watch, which is the line connecting RSI lows as such. So if this market is to drop beyond the current gap down, we would need to see a break below RSI lows on the 2 hourly. But back to Twitter, and similar to the Dow chart, this trend line here, based on this break, is going to come in play. I believe around here is where we are going to see some type of resistance on the 2 hourly, similar to that of the S&P 500 and Dow. We can also see a backtest line if we draw it as such. Right there, and we can, the red and the blue line might offer resistance here. So the question is to chase or not to chase this breakout. I would say the best thing to do is, as long as it is holding above this price and breaking out, then you can hold. If this breakout fails, then that will be time to get out. Eric Mother, Mother.com. As always, good luck, peace, and blessings. I see.